of August. And getting straight into the briefing, as you can see by the charts, US stock futures, European indices as well falling through this morning, seen in slight positive territory. It follows a generally positive risk on Asia Pacific session, maybe not quite to the same degree as what we had yesterday, but a similar I guess feeling to the fact that there's been no new escalations on the North Korean front, and that's given the market still some continued confidence, at least for the time being, to recover some of the losses that were seen in the second half of last week. So pretty similar to what we had yesterday. So with equities trading higher, you've got gold and T-notes lower. Gold top right seeing down about $10 at the moment. Came in and looked at this chart actually and saw this spike here. My first question being, wow, that's a pretty bit of a standout on the candlestick there. What exactly happened? And this is what it looks like on a minute. And timing wise, you can see here from the 9 minutes past 2. So it's definitely probably not going to be something like economic data that influence that. And when you see this type of movement, it's more kind of exaggerated, I guess, by the time of day, and therefore the amount of liquidity in the market. Not forgetting as well, obviously we're in the midst of summer, and so volumes generally are lighter anyway. But directionally, it's in the right way in regard to the risk on sentiment. But I wouldn't say there was anything news or fundamentally driven behind that brief pop that we saw down to S2. But confirmation of the trend though, really, since the US markets closed, because we did finish up about 1% in the S&P and about 1.3% in the case of the Nasdaq last night, which is kind of the best upward move we've seen in those indices in a number of months. And so consequently gold, some of that flight to quality bid on the Korean situation just continues to dissipate. One thing that we are seeing this morning is a bit of dollar strength, and US yields are trading higher. Dollar index is up about 0.3% this morning. So continuing to claw back some of the just general Trump-inspired losses, I guess, of recent weeks. But US yields also up in tandem. So you would think then this possibly could be linked to a bit of a monetary policy play. And with that in mind, we did have some comments out of one of the kind of more senior ranking FOMC members last night. This was during the US trading hours. Fed's Dudley basically saying he still favors another rate hike in 2017, saying that September balance sheet release is not unreasonable and sees inflation picking up in the coming months. He was referring once again to the tightening of the balance sheet in order to prompt that return of inflation, if you like. We also had that payrolls report, of course, which had a slightly stronger wage component as well, which would probably help his case. But continuation of the hawkish line delivered by the Fed, irrespective of the fact that the market is still somewhat disbelieving of them being able to deliver on this promise. Looking at what the markets are pricing at the moment is a December rate hike looking at about 45% if we're looking at the CME Fed Watch. So Fed Funds futures tracking of the short end of the curve, which is more kind of interest rate sensitive. And so about 45%, certainly not fully priced in. The market is even more probably dovishly placed than that. But it's just interesting to see that these senior Fed members, so Dudley should be someone who's closely aligned to Janet Yellen herself, so the more kind of centrist or collective view of what the Fed's overall assumption is, and maintaining that more hawkish slant. And so dollar strength, both pairs in Eurodollar and cable here a little lower. We've already had a brief run through S2 in Eurodollar, failed to really substantially break that, but certainly going through what was close to that double bottom that really defined yesterday's session, a break of that. I think this is what one of the guys in the trading live room, Edward, was trading this morning. So very nice start to the day. But looking longer time frame here, should we retest that low down at S2, because we've seen a pretty decent bounce since that point. Probably the next line beyond here that you'd be looking at would be those lows at the 10th, followed by that initial spike low seen on the 9th, and below there 117 handle psychologically and 116.81. Not that we might test these levels specifically today, but certainly as we go through the week, these would be levels that I'll be keeping an eye on. Consequently, amid the dollar strength, cable also under some pressure, just being held up here by S1. But if we start looking at the cable chart on a bit of a longer time frame as well, then S1 acts as a pretty significant technical level of support. You can see that defined by the 11th of August, and also going back to the 20th of July, it was around a similar price point to where we have just run into a bit of a wall at the moment. Any break below there, then obviously you've got the logical target probably is 129.30, but I would just be keeping an eye also cable where we are at the moment. Keeping in mind though, we've just got under 1 hour until we get arguably one of the most important UK economic data points that we see on a monthly rotation, that being the UK CPI reading, which we'll have a look at in a second. So jumping to the headlines, a couple things then to have a quick look at. Really, I've talked about this already, but this has helped this moderate continuation of risk on sentiment. North Korea backs away from the Guam strike threat. So Pyongyang essentially released a statement yesterday, and the language was toned down. Now, whether or not this is a kind of decision to make a bit of concession to stop the process from escalating any further, or whether this is kind of an admittance that, well, maybe their technology isn't quite there at this point, so they've got time on their side, and so they've just stepped down the language a touch. On the flip side though, there are a couple things here with North Korea that I want you to be aware of. Now, although the situation has come off its most potent level, you would say, from last week, certainly there are a couple of things that could act as a bit of a trigger or a spark to reignite this North Korean fear, if you like. So North Korea at this point have said they've backed away from the Guam strike. However, if they were to strike that particular island, then the defense chief of the US, Mattis, has said it would be game on for war if that were to happen. Now, to be clear, he hasn't, Mattis, specified what would happen if the missiles were to drop in the ocean surrounding the island. That, you would think, still would be met with an escalation in the situation, but what he's referred to specifically is if it was to strike the island, which as a rough estimate has something, Guam, I think it's a population of about 170,000, and the amount of US military personnel on that island is about 7,000. So in relation to the population, very large in terms of the airbase on that island. Now, one of the important things here, talking about North Korea and obviously the US, is China and their role in this particular situation. Now, if you've read the press this morning, trade tensions between the US and China heating up, or due to heat up on Tuesday, Beijing warning that it will not sit idle if the US probe into its intellectual property practices leads to sanctions. So Trump, again, making a decision to order an investigation is only continuing to push the boundaries, if you like, of a fairly fragile or high amount of tension in the relationship, where obviously China is closely involved with the North Korean situation. This likely isn't going to help, but obviously this is Trump's way of doing things, so to speak. Now, where does this go from here is quite interesting, because today specifically marks a very interesting day, because in Korea, both North and South Korea are having a celebration today. It's the anniversary of the end of Japanese occupation in terms of historically for Korea as an entirety as a country. Now, anyone who knows about North Korea and the correlation between national celebrations of a day of significance in history for North Korea and the day that they tend to test fire a missile, it's a pretty tight correlation. Not saying that's going to happen necessarily, but for someone like me, thinking about forward thinking of the news flow that could potentially come out in the session and in the future, certainly my wits are a bit more about me today, specifically because of this celebration reason. Secondly, coming up towards the end of the month, there is a regular annual US and South Korean military exercise. It takes place every year, but obviously it comes in a slightly different context this year. Those military exercises are due to run for a period of 10 days and are, as far as I'm aware, due to run from the 21st to the 31st of August. So we've got about another week really until they kick off. But what I'm saying is, today specifically for that anniversary, I'd keep an eye on activity on the news wires and on Twitter for any test fire of a missile type situation. But then also towards the end of the month, it wouldn't surprise me if this Korean situation kind of takes a bit of a backseat, possibly over the next week, but returns to the fold at the end of the month when these military exercises get underway. So just a bit of context to the situation. A few other things to be aware of. We have the RBA, Reserve Bank of Australia. They had their minutes released last night. There wasn't really, this came out, bear in mind, at 2:30 in the morning. So if you look at your Aussie chart, DA6, the ticker on CQG, hasn't really been much in the way of an immediate move on the back of that. Essentially, they renewed their focus on mounting household debt, even as their outlook for the nation's economy had improved. This follows that on-hold interest rate decision they had earlier in the month. So nothing too much to speak of there, really. Other news you have had from Germany, their latest economic data, this being GDP figures. This was the flash Q2 readings, quarter-on-quarter 0.6%, actually 0.1 lower than expected. The year-on-year 0.8 against 0.6%. These data points not having too much of a direct read across on the price. The fall in the euro-dollar pair, I'd say, is not so much on that miss, more to do with the dollar strength, I would say. But one thing to keep an eye on with this type of economic data from Germany, certainly we'll be keeping a close eye in the context of Angela Merkel and her ability to maintain what looks like to be at the moment still a fairly comfortable victory in the federal elections, which will come next month. So only about 5 weeks away now until those German elections. Closer to home, what's going on with Brexit? So it continues to be fairly quiet on that front, and we've had what I feel is really to be expected. I would think this was always going to be the case, that being that Britain will seek to continue its current customs arrangements with the EU for several years after Brexit, a victory for the supporters of a smooth transition. So this is a government paper, it's due to be published later today, making clear that the UK wants to remain in the customs union with the EU for at least an estimated 3 years of transition after 2019 exit. Now, why is this a good situation, you would say? Well, actually, from an economic point of view, what you want to do is give businesses confidence about the future. Businesses don't just act on the here and now. Investment decisions about the growth of firms, the employment of staff, so on and so forth, takes years of planning. And so without that locking in that clarity, very difficult for companies to want to take any type of risk about the future, and therefore hence it puts more pressure on an already slowing UK economy amid these higher prices and poorer confidence amongst UK consumers with low wage growth and the situation as we know. So this would be in essence more of a positive on the situation, but I feel as though it was always in inevitability to it, in that I still stand by the fact that the likelihood is that we'll still probably have the baseline scenario, we'll exit the EU, but the fact of the matter, at least for the ongoing, I'd probably even say 5 to 7 years, our relationship with Europe will look pretty similar to the one that we've always had, while we'll continue to kind of pick through the legality of exactly the full Brexit situation. So this isn't really having a direct impact on the pound this morning. And just as I'm speaking, actually, that technical level we're just having a look at earlier, just edging below there at the moment. Okay, to wrap things up, quick look at oil, because oil, I noticed pretty severe turn in fortune as the US session really got underway, and we continued to tick lower well after we went home yesterday evening. We broke through the low that was seen on Friday of last week. You can see it broke, came back to that level, then it pushed all the way down to what was on the day S2 and below. Interesting comment that I saw late last night was from the EIA, and they've basically said this is the headline reading: US shale oil production for September, which includes new regional data input, is forecast to rise by 117,000 barrels per day to 6.15 million. Its 9th consecutive monthly rise. So North American output from the US anticipated going forward to continue to rise, and it's been 9 consecutive rises now in terms of on a monthly basis. So just having a look, crude, this last little push we've had to the downside, you can see here on this red top left here, pushing session lows, 47.35, just a break seen of the late US session low here. Let's have a look a bit more longer dated. Anything else coming up? I guess the $47 handle, probably the next level of significance. You got the high that was seen back on around the 21st, 47.21, before we get to that point. So a bit of pressure on crude. You don't forget, obviously you've got quite a bit of strength in the US dollar. We're up about 0.3% amid some of this persistent hawkish commentary out of the senior Fed official Dudley. You also had, of course, that Chinese data. Doesn't really help in the global demand context when retail sales, industrial production, fixed asset investment in China yesterday was all weaker than anticipated. And then you layer in the fact that US output from the Energy Information Administration's forecast still anticipated to move higher going forward, locking in that persistent theme of US output increasing. So not short of bearish factors, I would say, when you look at it in that perspective. Okay, quick look at the calendar. Things to come. UK CPI. Now, I said at the very beginning of this briefing, actually, it's probably one of the most important pieces of economic data that you'll see coming out of the UK on a month-to-month basis. This being the fact that really when we look at things like jobless claims, for example, or the unemployment rate when it comes to the UK, it's at multi-decade lows. The job situation is actually not a concern. Housing market started to come off this kind of highly, what some would say, overvalued levels. So some of the first time in a long time we're seeing house prices across London and kind of seeping out to the broader country, also moving slightly lower, likely investment decisions of that large nature put off by consumers amid this uncertainty, both politically and with Brexit ongoing. But really it's the inflation issue which the central bankers, the Monetary Policy Committee are very focused on. And if we look at, well, let's just get our trading economics chart up and make a bit more sense of why specifically inflation is so critical, is because if we rewind the clock back just a few months ago, there was a real threat here as far as the hawkish members of the MPC were concerned, that this rise from October 2016, where inflation year on year in the UK was at 0.9%, we've gone from 0.9, 1.2, 1.6, all the way up 2.3, 2.7 to 2.9%. Now this is a pretty clear trend here. If you were to just X out that drop that we had last month, you would think there's good reason, despite the fragility elsewhere in the economy, for these hawks on the MPC to remain of that viewpoint that an immediate rate rise is needed in order to stay ahead of the curve in terms of inflation. Problem is, last month we had a pretty large decrease. Expectations were for 2.9%, it came in at 2.6%. So a much weaker than expected number. Now, going back to what's expected for today, the year-on-year is expected to see a minor uptick to 2.7%. So basically holding steady. Now, if that is the case, from a monetary policy point of view, I would say that the two more hawkish members, Saunders and McCafferty, likely will maintain their argument that they still want to have an immediate rate hike, but I don't see that then shifting any influence of any of the other members. Now, looking at some outright or outlying scenarios that could occur here. So amid almost the stronger trade here might be the dollar is already strong this morning. Now, maybe it's tied predominantly to the reason of Dudley, maybe not, but the dollar is up about 0.3%. That's weighing on both major pairs. Cable's already come under some pressure. Now, if we get a number, let's say, that comes in at 2.4, 2.3%, that sounds like a pretty big drop. But don't forget, last month we were expecting 2.9, it came in at 2.6. So what's to say that it might not come in at 2.3%? If this situation was to be repeated, I would say in the context of a much stronger dollar as well, could be a good and strong short opportunity here to get involved in the sterling currency. Now, looking here technically, there's really not a great deal on the downside. Now that we're kind of just below this point of that technical level of significance, we were looking around S1. Really, you've got the 129 handle would probably be the target in that type of setup. It's about 50 pips away. But let me stress though, you'd need a considerably weak number, I feel, to get down to that kind of level. What that would mean then, if it did drop inflation that significant, well, the two hawkish guys at the Bank of England really, you would say, cannot continue to have that same argument. And so any threat or any timeline of when the Bank of England are likely to hike rates next gets pushed way out down the timeline curve. So that's the big one to look out for. CPI is coming up. Looking elsewhere, with the CPI you get the other inflationary linked measures, RPI and PPI. Going into the US afternoon, today is obviously a lot more interesting than Monday from a scheduled economic data release point of view. US retail sales is going to be key. This last time came out showing weakness across the board. If you remember, I think if I remember rightly, it was US CPI and retail sales were both weak. This starts to bring in then big question marks on the Fed's ability to be able to deliver on its communication path. Obviously the Fed are telling us they want to commence this balance sheet tightening process, and they also want to hike rates, both before the end of the year. And so with weak inflation going further away from target and the consumer seemingly struggling, again, very hard for them to maintain that kind of stance. Dudley suggesting that they will at this point. But things like retail sales, given the weakness that was seen last month, we are anticipating a bounce in the figures this time round as a consensus estimate. But if that doesn't occur, again, this puts more pressure onto the Fed. And then looking into the afternoon, that's really 130 is your main focal point. We do have some other lower tiered natured numbers which are really not going to have an impact on the marketplace. And then we get the API crude oil inventories as per usual shortly after 9:30 this evening. And again, traders will be looking at that at the time of release, and then when we come in tomorrow morning as to align expectations as to market positioning for the accompanying DOEs that will follow Wednesday afternoon. Okay guys, coming up to 9 o'clock. That's your morning briefing then. Going to wrap it up. Any questions, please let me know in the chat room. UK data 9:30, US data retail sales at 1:30 are your two kind of main features of the day from a schedule perspective. Keep an eye, of course, as ever. Trump has had a bit of a pattern I recognised yesterday, tweeting usual routine when he gets straight out of bed. So that kind of 11:30 to 12 o'clock time frame is key. And just keep an eye on the pound between now and 9:30, as there tends to be a bit of pre-release movement in major UK economic data. So just be aware of that. Okay guys, have a good session and a good day. Thank you very much.